Rejection rates are going higher, and credit is now harder to access for many, many Americans. This is a part of the economic cycle that I started describing almost 3.5 years ago, where, and this exact same scenario played out in 2007 and 2008, where banks were coming under more and more scrutiny because they had already started a crash in mid 2005, and regulators were getting on them because there was not trouble brewing, trouble already well underway. So what they did is they pulled back the amount of money they were lending. People that they used to give loans for, vehicles, credit cards, houses, they were no longer giving those loans for. And that is exactly playing out right now. If you are having problems with your credit score dropping, or you don't have a good enough credit score to access money during the most amazing downturn in our country's economic history in the last 100 years, you need to get that fixed now. If you're in debt right now, you need to work your hardest to get out of it, because there are so many opportunities because of this story that I'm going to tell you right out of Bloomberg, right out of the mainstream media. This is happening before your eyes. Banks are no longer lending to people they used to lend money to merely 6 months or a year ago. Check this story out. And before I get started, I'm going to do something because there are so many people that don't have a blueprint, don't understand how to get out of debt, how to build their credit score, and then how to take advantage and use debt properly to make lots of money. I put together both my courses, a limited time bundle for $49. The Dominate Debt course and Credit Score Pro. It is an insane deal. If you want to take a look at it, the link is down below. The story is out of Bloomberg. It says US consumers had a tougher time accessing credit this year, with applications for auto loans and mortgage refinancing being turned down at the highest rate in more than a decade. It says, despite largely stable demand, applications for various forms of credit were increasingly rejected in 2024. If you've had a loan rejected, whether it be an auto, home loan, or even a credit card, let me know down below what it was that you were trying to buy. And this is a judgment-free zone, but you have to understand that as if you are one of the people that are being turned down, you're not the only people that are being turned down. And what happens in an economy where credit slowly contracts and banks get tougher on their standards, what happens is the velocity of money around the nation comes to a slowing, grinding halt. And then what happens is we have liquidity events. When money is unable to flow freely through an economy, and I make that infinity symbol for a reason, that is when a breakdown occurs. That is what many people have been preparing for. I am one of them. If you're one of them, type 1 down below. It says here, this Americans also became more pessimistic about their ability to tap into credit in the future. Reported rejection rates for credit cards, mortgages, and auto loans, credit card limit extension applications, and mortgage refinance applications all rose in 2024. So across the board, we are seeing rejections of every type of loan out there. This comes from the New York Fed that they just said in a statement. The findings showed reported rejection rates rose to 21% this year from 20.1% in 2023. And that's well above the 17.6% we've seen before the pandemic. So before the pandemic was one thing. We are now at higher rejection rates than even before that. And we are in pretty bad shape. Borrowers with credit scores under 680 were especially likely to face rejection rates that were above pre-pandemic levels. Think about going back to 2008 as an example. How many people sat on the sidelines as the housing market tanked. And the reason why the housing market tanked was for one reason only, because less people bought homes. Well, why did less people buy homes? That one reason, because less people had access to credit because of this exact phenomenon. If that was you, think about how much money you lost back then sitting on the sideline. And this is not like reading some of the riot act. Like, trust me, I know what it's like to sit on the side and not have access to the amount of money that you desire to go out and take advantage of ultra low prices. This is something that people need to get fixed right away. And it's actually very easy. Anybody can do it, but most people have very little path forward or a complete plan to do so. Now, it said here, the average rejection rate for mortgage applications increased by 8.6 percentage points to 20.7 in 2024. That's more than double the rate of rejections in 2019. For mortgage refinances, the average rejection rate rose to a series high of 25.6%. These are people that are trying to refinance our house and take cash out so that they can just pay bills. Debt consolidation is among the highest reason right now. If anyone here works for selling mortgages, please back me up here down below. It is the biggest reason for cash out refinances. It's not so that they can go buy a second house. It's so that they can go out or buy a brand new car. It's so that they can go and consolidate debt because they are swimming in debt and they're this close to claiming bankruptcy. It says here, mortgage refinances, the average rate rose to a series high of 25.6. Think about how serious this is. In auto loans, it says, rose to 11.4%, which is the highest since the start of the series in 2013. Borrowers didn't expect it would become easier to obtain credit, or they don't expect it to be easier in the near term, and fewer people are planning to apply for loans over the next year, this study showed. The share of people who said they are likely to apply for at least one type of credit in the next year dropped to 23.1% in 2024, which is down from 25.9% in 2023. The fact of the matter is, if you do not have a good, solid credit score with a thick binder, a thick credit history, and low debt, you're going to miss out on the greatest opportunity of your life. So here's the question. Are you wanting to miss out on that opportunity? Because a lot of Americans are going to find themselves in the next 12 months in the hurt locker when it comes to trying to go get a loan. And you are going to see the most amazingly, it is going to be epic, the downturn in asset prices. Everything from used vehicles, new vehicles, houses, to just stuff, art, baseball cards, collectibles, anything, because people will be scrambling for money because they can no longer go to the bank and apply for a credit card or any car loan. This is what's happening. If you want this fixed, I've put together that deal down below. Thank you, Neil, for the super chat. If you want to fix your credit score, if you want to get out of debt, I've put both courses down below, a bundled price for $49. This will give you a way out. Many people have taken it. We've gotten incredible reviews. As a matter of fact, if there's any students here watching this video that have taken either of those courses, please let them know what you think down below. Good, bad, or indifferent. I don't fake my reviews. And I thank you for the opportunity for me to be able to come into your home and help teach you how to do this, because this is something that is so much bigger than one or two of us. This is an opportunity that, no joke, hundreds of thousands, if not millions of people can be ready for, and still everybody have an amazing opportunity, because there is a lot of credit right now shrinking fast. And banks know it, and they're going to cover their butt. I hope you're ready for it too. The Economic Ninja is out.